Hello guys, and welcome back to Transformation Academy. In the last video I posted, it was a Transformation Academy intro. So in this video we are kicking things off with the first lesson of SMC. I know I said I'll be giving SMC tutorials, and this is the first video on SMC tutorials. So to anybody who doesn't know what SMC is, it's called Smart Money Concepts, right? So basically we are dealing with supply and demand and the direction of the market. So in the market, we typically have to do three things. We typically can do three things. You can either buy the market, you can either sell the market, or you can either wait on the market so that it gives you opportunities to buy or sell. And for you to be able to buy or sell the market, you need to understand where the market is going, right? You cannot buy if you don't know the market is, if you don't know if price is gonna go high, and you can't sell if you don't know if price is gonna go down. So this will help you, and this will help you get to know if the market is going up or down, and we call it market structure. This is the first lesson, and it's called basic market structure, right? Basic market structure. Okay, so basic market structure. Okay, so we're gonna first start off with the bearish trend, the bearish market. So how do you identify a bearish trend, right? So to identify a bearish trend, there are characteristics that align with the bearish trend. And if you can notice these characteristics, you'll be able to tell if this market is going down. And if you can tell that the market is going down, you can be able to position yourself into a sell position, right? But today, we're not going to talk about sell positions or stuff like that. I'm just here to teach you in this lesson how to identify if the market is going up or down, right? So let's begin with the bearish trend. How to identify if price is bearish. The first thing you need to see to identify a bearish market is you need to see a higher high, right? So this HH, it means higher high, and this LL, it means lower low. This LH means lower high because this high is lower than this high. This is called lower low, like we said here, because this low is lower than this low. This is our lower high because this high is lower than this high. Lower low because this low is lower than this low. Now this BOS, it stands for break of structure, right? It typically means the price has broken structure, has broken a previous significant low or high, right? So now let's go into how you can identify a bearish market. So the first thing you want to see a higher high put in a lower low. Once you see a higher high, put in a new lower low. This is your first indication of lower prices, right? But just by seeing this leg only, this leg, this higher high, put in a new lower low, it's not a strong confirmation for lower prices because price can just put in a lower low and then go up to put in a what? To put in a new higher high. So to give you strong confirmation that this is a bearish market, you want to see price give you a pullback. What is a pullback? A pullback is a retracement in price, right? A retracement in price until price at some point decides to put in a what? A new lower low, right? So when price comes up, you want to see price come up in here, right? And then you want to see price respecting this high, right? Because if price was to go up and break this high, then price is no longer bearish. Price is now bullish because price just gave you higher prices. The reason why the reason why you can identify a bearish market is you want to see lower prices. In a bearish trend, we're expecting lower prices. So you want to see a pullback, a respect of the highs, and then a violation of this low, right? So typically in a bearish trend, we are respecting the highs and violating the lows. It's that simple. You want to see a respect of the highs and a violation of the lows. And if you see, when you see this violation of the low, it turns into a break of structure, meaning to tell you that price is indeed giving you lower prices because first, this was the lowest price it gave you. this lower low, and then price retraced, pullback, gave you a lower high because this high is lower than this high, right? And price then bottomed out to give you a new lower low, violating this previous lower low. Means price went lower than this initial price input, right? Indicating that yes, price is indeed bearish, right? Because you are getting the lower prices. And then the next thing you want to see that now that you have been given this initial move, this is your confirmation that price is indeed going down. This is a bearish trend, of course. And then what you want to see again, since you're expecting lower prices, you want to see another run up, retracement, a pullback, a respect of this low. Now, why are we respecting this low and no longer this high? Sorry, why are we now respecting this high instead of this high? We are now respecting this high because this was the high that gave the break of structure. This was the high that violated the previous lower low, right? This is the high that initially gave you this lower price input. So if price is to violate this high, then price is no longer bearish, right? Cool. So what you want to see, you want to see a retracement up, right? And then you want to see another bottom out, a sell, breaking the previous low, giving you a new break of structure and giving you a new lower price input, and also giving you what? A new lower high. Okay, so this is how you identify a bearish market. The first thing you need to identify to see a bearish market is you need to see a higher high in print, a new lower low, and then you want to see that lower low give a retracement, a pullback, and then price, you want to see price respect the previous high, and then you want to see price violate the previous lower low, giving you a break of structure. And then you want to see the same thing happen again. You want to see a retracement, pullback, and then you want to see a violation of the low, giving you what? A new break of structure to the downside. And then in that point, you can now determine that from this lower low, you can determine the price is going to give you a pullback, a run up, and then price is going to respect this high, and then price is going to violate the low, giving you what? Giving you a break of structure to the downside. Okay, so now let's move on to the bullish trend. Okay, so is like we've said on the bearish trend, if you wanna identify a bearish trend, you wanna first see a higher high give you a lower low, right? The same is true for the bullish trend, but in reverse. If you want to identify a bullish trend, you want to see a lower low give you a higher high, right? And then, so this HH, like we said before, is a higher high, and this H low, this HL, it stands for higher low because this low is higher than this low, and then HH higher high. This high is higher than this high. HL higher low. This low is higher than this low, and then higher high. This high is higher than the previous high. Okay, cool. Now that we've got that out of the way, let us continue. So to identify a bullish trend, you want to see a lower low give you a higher high, and then you want to see a retracement, a pullback, and then you want to see a respect of this low, right? Once you see a respect of this low and a violation of this high, this move confirms to you that price is going up, that it's a bullish trend, and we are indeed expecting higher prices. So once you see a respect of the low and a violation of the high, then once price breaks this high, it turns into a what? Into a break of structure. Am I right? Cool. And then and then after we see this break of structure, we see price give us a higher price input, a higher high, because this high is higher than this high. And then you want to see a retracement, a pullback, and then you now want to see a respect of this high, of this low. Why are we respecting this low instead of this low? We are now respecting this low because this was the low that was responsible for the break of structure. It was responsible for the new higher price input. So therefore, this is the high that needs to be protected because it just gave us this higher high. So you want to see price respect the low and violate the high. And in violating the high, price gives you a new break of structure and a new higher price input. Right. So this is how you identify a bullish trend and how you identify a bearish trend. And now just to a quick recap of the entire lesson of how to identify a bearish trend and a bullish trend. So the first thing you want to see, let's start off with the bearish trend. What did we say the first thing you need to see to identify a bearish trend? The first thing you need to see to identify a bearish trend is you want to see a higher high give you a lower low. And then after price gives you that lower low, you want to see price come up, and then you want to see price respecting this high. And then after price respects the high, you want to see a violation of this new lower low. And after price gives you that violation of the lower low, it gives you a break of structure because this structure was just broken. This lower price input was violated and broken. Means it's a break of structure, and we're now focusing on this lower high. Now, after you see a break of structure, after you see price give you a lower price input, you want to see a retracement, a pullback up in here, and you want to see price respecting this high. Why are we now respecting this high instead of this high? Because this high was responsible for the new lower price input, and it was also responsible for the violation of the previous lower low and responsible for the break of structure to the downside. And then after you see this run up here and then price respecting the lower high, you want to see price violate the previous lower low, giving you a new break of structure and giving you a new lower price input. And if price was to continue, you initially want to see a run up and a breakdown, right? Giving you what? A new lower low, and giving you a new lower high because this high is now lower than this high, and then a new lower low because this low is lower than this low. Cool. Now, the same is true for the bullish trend. You want to see first a lower low give you a higher high, and then after price gives you a high, you want to see a pullback, a retracement down, respecting the low, right? After price respects the low, you want to see a violation of this higher high. Once you see this violation of this higher high, this is an indication that price isn't a bullish, and then you want to see a break of structure. A break of structure is just a violation of a significant previous high or low. Right, cool. And then after you see this break of structure, you want to see price give you a higher price input, a new higher high. And then after price gives you a new higher high, you want to see a retracement, a pullback down, and then a respect to this higher low. Why are we respecting this low instead of this low? We're now respecting this low because this was the low that was responsible for the new higher high. It was also the low responsible for the break of structure, for the violation of this previous higher high. So once you see the respection of this higher low, you want to see a run up, right? Run up of price that gives you a new higher high and a violation of this previous higher high, giving you a break of structure to the upside. All right. So this is how you identify the market trend, and soon enough in the next lesson I will throw in the next lesson I'm going to throw in how price goes from bearish to bullish, now price goes from bullish to bearish, and then after that we will go into the live charts themselves to identify and to put this theory into practice. Okay, so this is the end of the first lesson. Thank you guys for watching. Do subscribe, like, and do leave a comment.